What's up, everybody? It is Monday, August 14th. I hope everybody had a nice weekend. Beautiful day out here in Southern Cal. Hey, folks, there's a lot of smart people out there. I'll tell you something. And you know how I know? It's because they tell me. Now, I've been in this business for over 40 years. I've been an exchange member on 4 different exchanges. I managed money for a major hedge fund. I worked at a very large international bank, running a proprietary trading desk for them, as well as many other things, all right? But I gotta tell you that me personally, I keep learning new stuff every day. Every single day, like, you might think that after 4 decades or 5 decades of being in this industry and being a trader and following markets and, studying economics, I learned something every single day. But maybe, I don't know, maybe that's because I'm not that bright. Maybe that's because I'm not that smart. But for me, like, the longer I do it, the more I learn. But some of you out there, I know, like, you only need like one input or one exposure to something, and then you know everything. And again, the reason that I know that is because you tell it to me. I mean, I'll give you a perfect example. I had a guy who was a subscriber to my report who said, Mike, I watched your video, one of your videos. I think he watched the Treasury Statement course. And then he said, I don't need the subscription anymore. I know it now. I know it. So, like, that's amazing to me. That's amazing to me. Like, it's taken me over 40 years just to get to where I am right now. And like I said, I'm learning new stuff every single day. So congratulations to those of you who all you need is exposure to one single thing, and you know it all. And you kind of skipped ahead of the line. You don't have to do the 40 years that I put in, but that's fascinating, and it's like really, really impressive. I just think it's very, very impressive. But I'm just gonna go, the way like the tortoise, and it's the slow go for me, and I just try to learn something every single day, and I do. I'm exposed constantly to situations that are new, and I have to glean something from that. I have to navigate different situations, and I don't know, I guess that's just me. Anyway, I just wanted to talk about that for a second. So the markets today, I sent out, for those of you who have my report, and I sent it out last night, I said there's a good chance we're going to have a rebound in the markets today because we're coming into that quarterly interest payment, which is going to hit tomorrow. This does not change I would say, the bigger near-term picture where we're going to see a peak in the fiscal flows after tomorrow, and then once we get into September, we're going to get that corporate quarterly tax drain, and then, you got the budget negotiations, and you got something in October, and I've been saying not until mid-November will you see kind of like a bottoming out in the flows and a resumption in the positive trend in the flows. But then in December again, you get another quarterly corporate tax payment. So all these things are very, very, and I've said this many times and I've spoken about this, all these things are very, very predictable because we know these dates. Everything is about positive flows and drains. Positive flows and drains. Okay, that's like these quarterly cycles. They're very predictable. And then when you go a step above that, like the bigger macro picture, it's a constant net addition of financial assets to the economy because the government runs deficits, and the deficits equate to an addition to the financial balances of the non-government of the economy. So as long as that's the case, and it's not a situation of consistent drain, okay, we don't have that, we're not going to have that. It would take a major act by Congress, like such that Clinton did in his second term when he decided to run budget surpluses, which it destroyed the stock market. It sent us into a very deep recession in the early 2000s. And it was only a reversal in fiscal policy by George W. Bush, who became president after Clinton. And he sent out stimulus checks at the time. I think it was like $300. That was a big deal. Like everybody got a check. That put us back into deficit, and that replenished the financial balances of the non-government. So I've been saying that we're not going to see that. I mean, we're just not going to see that, because the five main spending items, which I've been telling you guys, it's Social Security, it's Medicare, it's Medicaid, it's defense, and it is now these interest income transfers, which just continue to get larger. I've said a lot of the government securities that are on the books right now, or that are in the hands of investors, they have yet to roll over into new maturities. And when that happens, they're going to roll over with a much higher coupon. So we're in this environment of large interest income transfers for a long time. And the only thing that would take that away would be if the Fed starts to cut interest rates. It's funny, because that's what the monetarists are begging for. That's what they're praying for. That's what they're hoping their almighty Fed God is going to do. But just like they got it wrong on the way up in terms of what rate hikes do to the economy, they're effectively fiscal transfers into the economy. Once you get over that initial period of discounting of financial assets because of the higher rates, you reach that inflection point, which I've talked about so many times, where you get the interest income transfers, the positive effect from that offsets completely, and then some, the negative impact of the interest rate. So that's the environment we're in now. So ironically, the monetarists, what they're begging for, what they're hoping for with Fed rate cuts, over time, that's the exact opposite effect. Yes, you have initially a positive effect for financial assets because rates are coming down, but then again, you're going to reach an inflection point where that positive impact from the discounting is going to be offset by the income drain of tax cuts. Not tax cuts, of interest rate cuts. Anyway, we're a long way from that. I think I saw something today that Goldman Sachs economists, they don't anticipate Fed rate cuts until like the summer next year, 2024. And, it's an election year. Who knows what's going to happen? Anyway, there's still a lot of interest income that's going to be pumped into the economy. And so that, like I said, in that big macro overarching picture, it remains bullish. So you got these cyclical patterns that come from drains and additions. And then in the overall arching scenario, you have a positive environment. That's why I always say, don't be afraid of these pullbacks. I mean, as long as we're in that big picture overarching positive environment, then these pullbacks are something you should be hoping for, because they give you opportunities to get into the market, good stocks, leaders in their industry, good valuations. Remember, when the market comes down, it gives these stocks even healthier valuations. And so you should look forward to these things. These things should not be feared, and absolutely you got to refrain from panicking and selling out. You know how many people in the last year and a half since the Fed started raising interest rates, and I was talking to a lot of these people almost on a daily basis, either themselves or they had clients or associates or colleagues who were selling out, and they sold out last year, and I kept saying, that's the wrong move. That's the wrong move. That's a panicky, emotional move. And how many times have I told you guys the thing to do, number one, is to restrain and control your own emotions, first and foremost. And number two is to go against those who are emotional and panicky because they're making the wrong decision. You cannot make the right decision when you're in a frame of mind of fear and panic and discomfort. I mean, you gotta suppress those emotions because they're irrational and they come from a lack of understanding. And what I try to do here, I'm trying to provide you with that understanding. That alone should help to calm you at least somewhat. I'm not saying it's going to eliminate completely the stress or the fear that might come. I mean, it gets to me. Don't think like, okay, he's some kind of superhuman. He doesn't feel it. No, there were times, I have to say, there were times last year, not that I was scared. It wasn't fear or panic. It was frustration, I think is the proper word. It was frustration. Like I was looking at the reaction of the majority of investors, like sheep, how they were running for the exits and driving prices down. And I was buying all the way down, but at the same time, I have to say that I was just frustrated by the behavior. I mean, it is a total self-sabotage. It's not even just self-sabotaging. It's one thing if you sabotage yourself, I really don't care. I mean, that's on you. But when, the mass behavior becomes like that, it can be dangerous in a very real sense to the economy, to individual livelihoods, and that's all caused by a stampede, by an emotional stampede, and that comes from lack of understanding. But of course, the people I spoke about at the beginning of this video, they don't have that problem because they could look at one little single video course and then they could say, Mike, I know everything now. Thank you very much. I don't need. Another thing that bothers me, I gave this guy a special deal. I'm not going to give special deals anymore because there's no loyalty. There's no gratitude there. Like, why am I giving a special deal? And he's like, okay, I'm canceling because I know everything now because I watched your one video on the daily treasury statement. I don't know, I must be stupid because I find things to learn every day. And actually, I strive to learn new things every day. Is that a good thing or a bad thing? I'm starting to wonder. I'm starting to question, even if that's a good thing. Maybe I'm just slow. Maybe I'm just wasting my time. Maybe there is like that one thing that's going to make everything happen. I don't know. Anyway, so yeah, we're gonna get the quarterly interest payment tomorrow. After that, the fiscal flows, the leading spending flows are going to slow down. As a matter of fact, I already, Friday, there was only like a 10 billion flow, that's like 1/3 of what we have been seeing over the last several weeks. So you see it coming, or I see it coming already. Tomorrow we get that injection, but after that, we're going to drop down, and not a big deal. Don't think like, oh, this is the end of everything. This is the end of the bull market. No. But as I said before, you can separate between these cyclical patterns and the overarching big picture. The overarching big picture is going to stay bullish. So sit back, actually enjoy the pullback. You might want to play it. Okay, a lot of times some of you guys want to do this kind of short-term trading, even though I advise against it. But I also tell you, I give you moments where there is opportunity to short-term trade. Like I said, today we're going to be up. I don't know how much more I can give you. That's exactly what happened. And I'm telling you, I told you weeks ago, even months ago, a few minutes back in this video, I said, we're going to be in a certain pattern all the way till like November, and then another dip in December, and then late December we go back into a positive. I mean, I'm giving you all these exact moments and dates. Like nobody can do that. People do that based on crazy things like cycles or the moon phase or something like. No, I'm giving it to you from the background of actual things that affect the markets, these flows. Nobody else does that. Again, how many times have I said nobody else does that? But it's true. I'm sorry. Nobody else does that but me. So you guys are lucky that you're here. Anyway, that's it for today, folks. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. You know, it's not just what I talk about here on these videos. I give out, today I actually gave out a stock recommendation. I send out emails during the day. So, and people find them helpful. That's the feedback I get. So I'm happy to provide it, but you have to be a subscriber to get that stuff. All right, everybody. See you tomorrow. Bye.